Hello and welcome. We're diving into a really critical topic today, and this entire discussion has been arranged and developed by the experts over at My Tax Accountant. We're talking about unreported overseas income. You know, the rules have tightened up. HMRC's systems are smarter than ever, and frankly, the penalties for getting this wrong are pretty steep.
So let's just start with a really simple question. Do you have any financial link abroad? Maybe it's a holiday apartment you rent out sometimes, a savings account that a relative left you, or perhaps you do freelance work for clients in other countries. If you answered yes, or even, I'm not sure, then you really need to listen in for the next few minutes.
Because, and this is the hook, you could be looking at a penalty of up to 200% of the tax you owe. And here's the part that catches so many people out. This can happen even if your mistake was completely accidental. We're talking about the 2025/26 tax year, and the stakes have never been higher.
And it's their expertise that's allowing us to walk through this whole thing today, from identifying the problem right through to finding a solution.
So here's what we've got lined up. First, we'll look at what we're calling the unseen tax trap. It's surprisingly easy to fall into. Then we'll get into the nitty-gritty of how HMRC actually finds out. After that, we'll break down that scary 200% penalty. And most importantly, we'll cover how you can fix your records and what your next steps should be.
All right, let's dive into the problem itself. Because, it's often not about someone trying to pull a fast one. It's usually just about not knowing the rules. And that's the unseen trap that catches so many good people.
This quote just says it all, doesn't it? It's based on a real-life situation. Imagine this. A UK resident realizes an old savings account their parents set up for them ages ago in another country has been quietly earning interest. They never touched it, never thought about it. But now, that feeling of dread about what HMRC might do is very, very real. It's a perfect example of how easily this can happen.
So what does this actually look like in the real world? Well, let's get specific. Got a holiday flat in Spain that you rent out? That income needs to be declared here in the UK. Or what about that foreign savings account? Even if the interest just sits there, it counts. If you're a freelancer in London working for a company in Berlin, those payments are foreign income. Same goes for any profit you make selling property or shares abroad. The net is cast pretty wide.
So the big question is, how would HMRC ever know? And a decade ago, that might have been a reasonable question. But today, the game has totally changed. There really is nowhere to hide anymore. Let's see why.
The big game changer is called the Common Reporting Standard, or CRS. The easiest way to think about it is like a global financial neighborhood watch. It's an agreement where countries automatically swap financial info about people who aren't their residents. So a bank in Spain is now basically required to talk to HMRC here in the UK. It all happens automatically. And the sheer scale of this is mind-boggling. We're talking about more than 100 countries all signed up to this network, feeding financial data straight to HMRC. The old idea of an offshore secret is completely dead. It's really not a question of if they'll find out anymore, it's a question of when.
Okay, here's a pro tip, and honestly, this one trips up so many people. They think, well, I paid tax on that income in the country where I earned it, so I'm all good. Nope, not quite. You absolutely must still declare that income to HMRC on your UK tax return. Now, the UK has agreements to prevent double taxation, so you can usually claim relief. But here's the catch. You only get that relief after you declare it. That first step is not optional.
Okay, that leads us right to the sharp end of this whole thing, the penalties. The numbers can sound a bit abstract, but the way they're calculated means the final bill can spiral out of control fast. Stay with me, this next part is absolutely crucial.
So, the first thing to understand is that the penalty all starts with your behavior. HMRC puts you into a category. If you took what they call reasonable care but still got it wrong, good news, there's no penalty. But if they decide your mistake was careless, the penalty starts at up to 30% of the tax owed. If it was deliberate, it jumps to 70%. And if it was deliberate and concealed, you're starting at 100% penalty. And believe it or not, that's just the beginning. Because this is where things get really serious. On top of that base penalty, HMRC applies an offshore multiplier depending on where the money is. Did you know? A place like France or Germany is in Category 1, which has good information sharing. But if your asset is in a Category 3 territory, one that doesn't share info so well, your penalty gets doubled. The location of your money can literally double the financial hit.
So, let's put that together. A deliberate error, which you try to conceal in a Category 3 country, that leads you straight to the maximum 200% penalty. Let's make that real.
If you owe £25,000 in tax, the penalty alone could be £50,000, and that's on top of the original tax and any interest. It's truly eye-watering.
But that's not all. Here's where most people go wrong. They think this is just about last year's tax return. Oh no. How far back HMRC can dig also depends on your behavior. For carelessness, they can go back 6 years, but if they think you acted deliberately, they can investigate the last 20 years. Just imagine 20 years of unpaid tax, with penalties and interest piling up that entire time.
Okay, I know that was a lot of pretty bad news. But here's the good news. There is a clear way to fix this. If you've just had a light bulb moment and realized you might have a problem, it is definitely not too late to get back in control of the situation. Let's look at how.
The outcome really boils down to one thing. Did you tell HMRC or did they find you first? Coming forward yourself with a voluntary disclosure is absolutely the best thing you can do. It means lower penalties, it puts you in the driver's seat, and it shows you're cooperating. The alternative, waiting for them to contact you, means higher penalties, playing by their rules, and a much more stressful process.
And there is an official way to do this. HMRC has set up something called the Worldwide Disclosure Facility. It's a formal channel specifically designed for people to come forward and get their overseas tax affairs in order. Using it sends a clear signal that you're trying to do the right thing. And you don't have to take my word for it. This quote is from HMRC's own official guidance. They are telling you, straight up, that cooperating is the best way to reduce penalties. Being open and working with them is your #1 strategy here.
All right, so we've been through the risks, we've looked at how it all works, and we've seen the solution. Now let's just boil it all down into some clear actions you can take starting right now.
If you take away just 5 things from our chat today, let it be these. 1. All your worldwide income has to be declared here in the UK. 2. Thanks to global data sharing, HMRC will probably find it anyway. 3. Penalties are huge, up to 200%, and they can look back 20 years. 4. Telling them first is the secret to lower penalties. And 5, and this is a big one, don't try to sort this out on your own. Get professional advice.
So, I'll leave you with this final thought. Are you absolutely 100% positive that your overseas tax situation is perfect? If there's even a tiny bit of doubt in your mind, the time to act is now. Please, don't wait for that brown envelope from HMRC to drop through your letterbox.
If you need help figuring this all out, you really should speak to the specialists. The team at My Tax Accountant are experts in this field and can guide you through the disclosure process. You can call them on +0208 570 8531 or email them at info@mytaxaccountant.co.uk. And just as a final note, please remember that this has been for general information. For any decision about your own finances, you really must consult with a qualified tax expert like the team at My Tax Accountant. Thank you for watching.